Hey, good morning. This is Mayor Valensky with Driving Markets. Anything said in this piece is only an opinion. It's not investment advice, not financial advice. Any money that you make is yours. Any money that you lose, unfortunately, is yours. Some of the viewers have said they begin to learn this actual warning by heart, which is great. This should be part of your daily get-up, understanding the warning, and therefore there will be no legal action taken against me if I get it wrong. It's only opinion. Let's move on. Okay, right. So if you remember on this piece, we've been calling the euro or the euro dollar and the euro down, especially euro dollar. It went up to 103.50 about 10 days ago, and then I was saying to you, really it needs to be sold because the euro is overbought. The euro is in a shocking state. Now, why is the euro in a shocking state? Is because if you remember the last GDP number from Germany, which I'm sure all of you know by heart, came in as minus 8.8, not plus 8.8, not 0.8, minus 8.8 on the GDP, which is gross domestic product, and that sent the DAX down in that particular moment. However, since June, if you look overall at financial markets, there's been a bear rally, and that's obviously pulled up the euro as well on the false basis that there is that the bear market was over and they're not going to increase interest rates and inflation is under control, and therefore the investors and traders who fooled themselves in Wall Street and around the world felt as though, yeah, we can get back in there, let's push the market up, it's all over, happy days, etc., etc. No. Now the euro has a particular problem because obviously it's split between the developed Western Europe with a massive powerhouse of Germany, which is producing most of the power within the EU, and then you've got Eastern Europe. Now, Eastern Europe's fallen into the inflation trap. So Eastern Europe is a big importer of oil. It's a big importer of commodities. However, it's got cheap labor there and a good manufacturing base. But it's got inflation running at anywhere officially between 12%, or so more specific, 10% and 15% inflation, and that is going to drag down the other part of Europe, which is the France, the Germany, the Holland, etc., and Belgium. That's all going to be dragged down, and therefore the euro is going to go down further. I was going to call a point. I'd say probably euro dollar. The moment's 99.82. It's probably going to go down by September to 95 to the dollar, and also GBP euro is going to go up to around about the 122 level. The pound's in a pretty poor state at the moment because the negative news coming out from the UK is constantly talking about recession, and it's going to go down, interest rates going to go up, there's going to be high inflation, the cost of borrowing and the cost of living, and that's put a downer overall on the UK sentiment and the pound itself. So you've got two major currencies there with two majors, which is the euro and the pound, are going to be under pressure over the next few months. It's unfortunate. I also want the pound to go up, but it looks like on cable, which is pound dollar, the pound is going to test the 115 level. We can't see it moving out of this range until the political situation is established, there's a proper Prime Minister, and there is correct direction as to which way is the UK going. So you've got two currencies there, majors are likely to go down. Now look at the US dollar. Got US dollar, Japanese yen. That's going to go up. It's going to break through the 140 level, and simply because the Japanese interest rate gearing or the interest rate direction is down. They don't really want the yen to get any stronger, so they have a zero rate, or very close to zero rate interest rate policy, where the US will be increasing interest rates again in September by about 75 basis points, and that will continue. I've said already from the beginning of the year that interest rates in the US will finish around about the 4.5% level. That is a bit keen based on the rates, based on the speed that they've gone up so far, but it could happen. I think in the UK we're going to finish up with about 3.25% interest rates this year, and the next year rates will probably go up to 5.5-6% in the UK, and also the same in the US. The rates are not going to come down, and inflation is, again, it's going to be here, unfortunately, for long term. There is a supply issue, there is macroeconomics, geopolitical issue. Can't see in the near future the Russian-Ukraine war finishing. Putin has it in his eye, in his sights, that he wants to get Ukraine under control, and then he'll probably start with other countries as well, Georgia, Kazakhstan, and that will push the price of oil further up. I've been calling oil up above $100. I'm not negative so much on the economy, but we've got to look at the real facts. And this report is looking at the facts where oil is going to go above $100 a barrel. You might not want to hear it, but it's a fact. It's probably going to go to 120, and that's going to have a further impact on inflation as well. So you just got to look overall of what's happening economically and macro, and not fool ourselves that everything's going to be hunky-dory in the near future and rates are not going to come down. We're just in a new era, and rates are going to continue going up. That's just the nature of the things. There is a Jackson Hole Symposium going on at the moment. Jackson Hole is in Wyoming. It's a once-a-year get-together of all the financiers, the bankers, the economists, and they discuss the general what's going on in the US and globally in the macroeconomic symposium, macroeconomic summary and event, as to get into more detail. And that gives us good guidance as to what the big head honchos in the US think about the economic situation and how it's going to move forward and what it's looking like on the horizon. So that will have, when that comes out, that will also have a slight impact. Gold is on the way up, which is interesting. Gold came down to $1,717 an ounce and jumped up to $1,752. I expect that to break above the $1,800 levels soon. Other commodities also over the next few months will probably start rising, especially the precious metals, which are used in a number of factors. So precious metals will probably rise over the next few months. Bitcoin is on the way down. Ethereum also is on the way down. It's been boosted up by all types of mergers, acquisitions, new developments, etc. But it's all in the price, so it's probably going to be sold off and likely to go down further. That's it for now. Mayor Valensky, Driving Markets. Hope you enjoyed the channel. Have a good day.